there's been a dramatic shift in sentiment around Indiabulls Housing Finance post the affidavit filed by the Ministry of Corporate Affairs. And that's the word coming in from Gagan Banga of Indiabulls Housing Finance. Shafali Malik had the chance to speak to Mr. Banga and questioned him on their plans to unwind the commercial real estate book as well as their loan growth targets. Listen in.
The environment has dramatically improved over the last 3 to 4 working days ever since the affidavit was filed by the Ministry of Corporate Affairs. Whoever is a practitioner in India understands that this is the deepest possible diligence that could have happened on the company, and given the fact that the government has looked deeply over several months into these allegations, which have been floating around since June, and has come up with this affidavit, is the best possible outcome that the company could have hoped for, or any of the stakeholders could have hoped for. And stakeholders are very positively responding. So the monies which were getting impacted because of the sentimental hit due to the PIL and all of these allegations, that those monies have started coming in. I would say that this is the best possible outcome that we could have achieved. It is a testimony on the level of diligence that we do when we give out loans, and I have been maintaining that all of these allegations are malicious, biased. No one has done their research, and specifically as far as this PIL is concerned, I'm on record to also say that even publicly available records have been ignored. Leave aside anyone reaching out to us to seek our side of the story. This affidavit clarifies on all of that. PIL, etc., is a court process. The court obviously has to satisfy itself independently. The company is a regulated entity. Other regulators also conduct regular inspections. So the court will follow its due process. But I think this whole sentimental shift which had to be done, there has been a tectonic shift over the course of the last 4 days, and we are firmly back on the growth path.
Moving away from these proceedings, so what will happen first? Because you've been trying to do both a buyback and a fundraise as well. So by when can we expect these? And are you still going to go in for a buyback, or more inclined towards the ESOP plan? And have you sought any sort of opinion from the SEBI on the same?
So what the board in its last meeting had approved, and subsequently we have already started the process of seeking shareholder approval through a postal ballot, is to raise up to $1 billion through NCD warrants, and also for our employees, we are altering the course of our employee stock option plans, which have historically been dilutive, to this new employee welfare trust structure, which has been approved by SEBI, and the regulations around that came recently. So subsequent to that, we can, on behalf of our employees through the employee welfare trust, which is an independent trust, can buy up to 2% of the company's equity every year. We have sought approval for shareholders for the trust to firstly buy up to 4% over the course of this and the next year. And if that happens, if the shareholders approve both the NCD warrant plus this up to 4% sort of purchase from the secondary market, I think that's what the management is intending to do at this point in time. If for any reason the shareholders are not to approve, then we will have to see what else we can do to send out a confidence signal to the market. At this point in time, I think we are looking at both confidence capital and growth capital to come via the NCD warrant, and we would also want our employees to benefit, and for that we are setting up this employee welfare trust.
Okay, so Mr. Banga, talking about the business operations, on various platforms in the past, you've said that you're planning to shed off the commercial real estate book. So at what stage is that process, and what about the asset quality issues there? And you're also focused on ramping up disbursements around the retail book. Can you elaborate more on that?
No, the commercial real estate book unwinding has been an year-long process. Over the course of the year, we have been able at a gross level, been able to either refinance or securitize, or the developers themselves have been able to raise private equity, totaling to transactions of close to about at a gross level of about 10,000 crores. We're looking at over the next 4 months another about 10,000 crores worth of transactions to happen. There is tremendous progress. We are talking to banks, we are talking to funds, and every day there is some or the other small traction. I expect the bigger traction to start coming in towards the third week of December, and then because of the holidays, etc., it may slow down towards the end of December and again pick up in January. Between now and March, one is quite confident that about 10,000 crores at a gross level transactions will be happening around the commercial real estate book. We are obviously using all of this liquidity, since we are sitting on a comfortable cash pile. We are using all of this liquidity to ramp up retail disbursements, and over the next 4 months you will see how our presence on the ground across the various construction sites, etc., meaningfully increases. From a market and a home loan perspective, Indiabulls Housing has a massive distribution. So when this elephant will move, as far as distribution is concerned, the market will take much more than just plain notice of that.
So from here on, what kind of loan growth are you targeting, especially with the improved liquidity scenario? Like you mentioned, the environment has improved just in the last few days. And at what cost would you be raising money going forward?
So we are raising specific money from banks for onward lending at between 8 and 9%, and then a lot of liquidity is also being raised from the commercial real estate refinance which is happening. So between all of this, we hope to get back to our historical number, which used to be a run rate of 2,500 crores of retail disbursements a month, up from about 1,000 crores. So I think over the next 6 months, we will traverse that path, 1,000 crores a month, which we have been doing over the last 6-7 months, increasing to 2,500 crores. Every month, we will keep adding a few hundred crores of disbursals. The nature of these disbursals is also going to change. We were more focused on doing further disbursements on partially disbursed home loans. Now we are out there looking at new home loans, which is how the market is going to feel the distribution presence of Indiabulls, which is the single biggest strength that we have.
Mr. Banga, a question which is directed towards what's happening at the industry-wide level. So the government recently announced the Alternative Investment Fund for the real estate sector, and from what I gather is that various PE players are also inclined towards last mile funding of some of the projects. So give us an on-ground picture. Are there green shoots emerging in the sector?
Green shoots are emerging. Most of what the government is attempting to do, I'm on record on various forums to say that, I expect the monies to actually flow in the fourth quarter. The more important thing through all of these announcements that the government has achieved is that in the wider real estate stakeholder base, there was this general perception as if the government was almost against the real estate sector. By taking all of these initiatives, the government has publicly stated that they're firmly behind the real estate sector. That itself is the biggest green shoot that one can see, and momentum will come back. My sense is as money starts flowing on a last mile basis, interest rates have also been coming down, so affordability for consumer is increasing. That is bound to flow through to demand. My sense is that from the fourth quarter onwards, segment by segment, the real estate industry would start improving. The stock markets have been doing quite well over the course of the last month or so. That generally has a flow-through impact on even premium housing, which one is starting to witness. So if the markets are to sustain or get better, and if interest rates are to continue to move down, along with all of the initiatives that the government is taking, real estate is going to be in a much brighter spot next quarter onwards, if not earlier than where it is today.